Share my 45 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. In tonight's video, we'll do a review of what happened. There's a bit of a reversal. Not sure it's material, but we'll go through all the details of the markets I normally cover. Let's get into tonight's video. Well, welcome everyone. Interesting day today. Big follow through overnight when I think yesterday we were up 1.5%, but the NASDAQ managed to get up 4.5%, 3 and change. Don't remember the exact number on the S&P, but I was asking myself, the question was why? And the question was, there wasn't an answer to the question. There was no reason for it to be up. Just that stampede that started off of the lows and off of the comments that Bassett made, and then some further little window dressing and more jawboning. Still, maybe I'm wrong. If I'm wrong, please tell me. But I don't see any deals, and I'm getting a bit frustrated with what's going on in the markets. Just a lot of talk about deals, but no deals. And there's, 70 countries all calling at the same time, all this stuff. And I'm still kind of stuck on this jawboning and talk is cheap kind of mode right now. I think we all need to see a deal that is material and that is substantive so we can move forward with this stuff. There's, like I said, the volatility that's been created was amazing. But as I watched the session, especially those of you that have the indicators, there was a big turnaround happening on the hourly chart, and it was significant, signaling really pretty much off of the open this morning. We started to see signs that it wasn't going to hold together. And by the time we got through first hour and a half of trading, then we could see that there was some serious selling still layering in time after time. It kind of consolidated, and then it started to break down to the point where I think we finished up 0.46 or something on the S&P. NASDAQ did a little better, but it was up a bit more. But this type of action, we actually did something that I talked about last night, as we were able to close back under the 21-day moving average on the S&P. We spiked above it, it traded there, and it kind of sold off. And I'm just looking at prices right now on the other screen, and we're right at the 21-day moving average, almost exact value right now. So we'll go through the details. So tonight's plan will be that we'll go through, kind of review some charts. I'm trying to get to the point. It's about somewhere around 20 after the hour, maybe 25 after the hour. The database will be updated. So it's in the process of finishing the nightly run as we speak. So I want to go through the database. It was interesting because we got 2,000 new buys, and we were back up to 22% on the database. I think I misquoted the number yesterday, mainly because it was still in the process of updating, or I didn't refresh my screen the final time to get the numbers. But we're at 22%. If you're new to the channel, and what I normally talk about is once the database gets back to 22%, this is basically a pivot point. We'll see if there's follow through. It was another positive day. See what kind of action we got, and I'll go through all those details here in a few minutes. There was some news today. Housing numbers, mortgages are terrible, down 12.7. Last month was down 8.5. So we're continuing to see some deterioration there. Although the actual numbers, new home sales, were a bit better, 724,000. And the SP Global stuff, all of those numbers came in pretty much as expected. So tomorrow we will get our typical claims and all of those numbers, and I don't see anything material coming out of the news cycle that's going to be important. I still think everybody's got an ear, listening and waiting for some kind of material deal that can show that they're doing their job and they're getting things done from the standpoint of renegotiating the World Trading Agreement. And that's a big task. I think sometimes Trump thinks he can just flip the page and everything goes his way, and it's all done. I can do this in one day. The reality is you can't, and this is a very big task. And I would argue that it could take much longer than you think to get this done. It could be years to really get it done. The big one though is China, and they're talking about Besant comments yesterday were that things are going to cool down. Well, they haven't even started negotiating, so I'm just frustrated right now. Everything was willy-nilly, and like I said, we still have some issues going on with the treasuries. We're not out of the woods there yet. It felt like all of a sudden everything was going to be okay, but by the end of the session today, while markets closed higher and things moved around a bit, they closed well off of their highs. There wasn't anybody to happen, and I'll go through the details, but we also retested the 2 week ago spike high that we got. We came right up to that, and last Thursday, 2 weeks ago Thursday, and I think that's a significant event that happened there. So I'll go through those details here just shortly. Let's go ahead and let me look on the other screen and see if I've got an update on the database. And yep, absolutely do. So let's go ahead and go through the normal cycle. We'll do the database. We'll go through the indices and see where we end up at on time. I don't think there's much to talk about. The news, earnings. Tesla got a little bump. We got, I'm not sure when Alphabet comes out. I don't think it's going to be material anyway. I think the Meg 7 is kind of off the sheets for the moment. So let's go ahead and take a look at the database. So this daily database, we've managed to get another 1,400 buy signals. So let's see, we got over 2,000 yesterday. I'm rounding off. We got 600 the day before, and now another 1,000. And the nets are a little bit lower than that, but we've got bullish ratios coming out of the database. So it's buying with both hands right now, which is interesting. We're over at 26.16%, and that's a good sign. That's a sign that we're at least starting to formulate some kind of bottom. I was looking at the numbers. I mean, the S&P now is down 8.6. We printed minus 21 something at the low. So we've rebounded pretty substantially. And if you recall, if we go back maybe 2 weeks ago, this is what I was talking about. We're going to rebound back into these averages. We're still working on that pattern that I talked about and the weekly pattern that I discussed last night. I'll go through it. But the database this is a good sign. And in fact, on Monday, when we had the big down day on Monday night's video, I was talking about the positive rotation of the 600 stocks that came in. So that was pretty substantial, I think, from that standpoint. So let's go ahead, and there's not much to talk about here. Before I move on, there is all the sector buys we have is interesting. We have transportation is up 1.8 on one day, but we look at consumer non-cyclical. After 6 days of that index, it's down 1.1%. No big numbers. 1.6% on consumer cyclical for today's trading. So that's a one-day trade. Also a one-day trade down 1.2, and the other utilities came back into play, and that is negative as well. So we had 4 new buys of the sectors, and they're all slightly negative on what would appear to be a big day. So a strange rotation, I would say, if we look at it from that standpoint. So this is the pattern I've been talking about. We got the consolidation. We had a little channel to the downside forming, and now we got a channel to the upside. We got just above the RTX level today. And I think, like I said, we got a bit of a rejection off those higher levels. There was actually, like I said, a really good trade-off at those extreme levels today, as we went from like 3.5% to up 0.4, I think is the number. Maybe, no, it was up 1. I'm sorry. It was up, I was looking at the hourly chart. So it was up 1.8, but still off of the highs after being up 3.5. That's pretty ugly. So far, if I blow this up a little bit so we can see it, the pattern that we're seeing right now is we're sandwiched between the 10 and that downward 21. So the 21 period, if I go and take a look at the current ppm level, it's at 0.36. That's big time trend mode. I don't think we'll be able to get above that and close. We might be able to do since we have a history of yesterday trading above it, we'll probably retrace some of that number. I've got, let me grab a sheet here and bring this in. It's on my other screen here. So, real quick here. Let me just publish this so we can see it, and I'll bring this in. So let me just bring this up. Here we go. And something got jacked up on my screen here. You're not able to see everything. Here we go. Sorry about that. So the sheet that is here right now, it is giving us a 70% probability of the downside for today. That's primarily, and I'm going to show you these PPMs. If you recall, the PPM shot up substantially over from like 0.2 all the way to 0.8, and it's already collapsed already. It's at a minus 0.19 now, so it's moved around a lot. I'm just looking at some of the support. So we've got a consolidation after the bounce. So we get the bounce up, now we're consolidate, and it's going to take probably another day. It looks like, we'll go back to the other page here. It looks like we can get a bounce as we come into Friday. So Thursday may be a little downward action or consolidation, and then Friday it looks like we can bounce back up again. Since we've gotten to this point, the level that I was talking about, if I go back to Thursday 2 weeks ago high, it was 55.28. We look at today, Wednesday's action, we look at that, we were 54.99. So we came about 30 handles from challenging that point. That's going to be your pivot point. 55.28 is going to be a big number. But then you have the 40 period moving average above that. So I still expect that the downward slope of these moving averages will keep things somewhat in check for the next couple of days. The downward pressure on both PPM 2 and 3 should be enough to hold this market back. But there's still a possibility, since we have, if you look at just the pattern here, you'll see we have a bit of an upward channel forming. depending on how we close today, we could see that channel turn back down. And I think you can see the downward, this is what I'm talking about here, the downward slope of these averages, and the PPMs are confirming that we're going to have enough pressure to keep the market under that level. So there's still probably a bit of a potential bid to watch for. Let me just see what yesterday's low was, or today, Wednesday. That was 53.77, and we've been 53.88. So it probably will have some. If we can take out yesterday's low, then we can move down into the market grid a little bit. But the expectations is really just a consolidation from this point. So as we let's go over and take a look at the weekly chart, because I do want to keep this perspective for the next. I don't want to lose that perspective. We're now seeing the collapsing of that pattern, that big volatility bubble that I talk about on a weekly basis. I'm going to say has at least 4 to 6 weeks where this is going to collapse in. The upper band of this is, it's interesting because 57.80 is this 40 period moving average. You look at the red dot indicator, which is projecting out what that is, and somebody was asking about that. I'm just going to tell you the way you formulate that is pretty easy. You'll see. I'm just going to show you. Take any of the WTR forecast tool, and you just go to inputs. You change the period of SMA to 1, and then you can change the thickness and all the other settings. But that's the only one that counts. 1, and then this has got future bars of 11, so it's predicting out 11 days. Let's go 12. But so what it's projecting then is that it's going to flow back into this pattern. It appears, bear with me a second, all my screens got jacked up. Not sure what happened to my setup here. Yeah, things are very, very jacked up here. Let me just fix this. Bear with me. Yeah, so the patterns that we're seeing here is really pretty typical within a consolidation range. So somebody's going to say, oh, he said, I think we still have some potential upside, and it looks like based on database and some other elements here. I'm sorry, I'm trying to focus and get this thing to fit on the screen. Okay, I think that's a little better. Apologize for that. I don't know how those got messed up. But the patterns you're seeing here on a weekly. We're going to see further consolidation. I think these upper bands will ultimately get to, which I think the recovery will continue. And once we've consolidated, I think we're 4 to 6 weeks away. We're going to chop around in here. Are we going to continue to get the volatility that we got? We'll see how it plays out. But I think volatility is the new normal. And we still have the White House talking heads that are going to be running around. I just hope that they get something done and make an announcement that everybody can start to look at a little harder and see what the possibilities are as far as getting the trade renegotiated. I think I think it's going to be a much bigger task than what has been presented. And you even think about the Doge stuff where they're talking trillions of dollars and they announced 150 billion. That's real money, but it's not a trillion. It's 1/10. So anyway, let's move on. Let's go to the NASDAQ. We'll stick with the weekly. We'll go inverse. We'll go weekly, then daily. But the weekly is going to just stay below these moving averages. And these values here, the 40 is going to put us, let me bring up these values 1 second here. Going to be 20,301 is going to be the top end of this. And we've got the 21 that is sloping in. So depending how many weeks it takes to get there, that's probably going to be right at that 20,100 level. We're probably heading there. As far as volatility daily and this a weekly chart, we're going to still see the overlap of the waves, and I'll cover that after we finish this week on Sunday night's broadcast. But let's go to daily. So daily, just like with the S&P, we're sitting there right on that 21-day moving average. That value right now is $18,758, and we're looking at trading at 18,849. So we're just slightly over that at the moment. So I'm expecting to see potentially yesterday's high retraced, although we did get on the NASDAQ, we got what's called an RTX sell signal. You know what? We did not. It traded above the RTX, but it didn't close there. But you can see the red dot indicator is suggesting that we get sandwiched between the 40, which is that 20,000 number I just mentioned, and the 21 and 10 are crossing over to the downside. And this is kind of a bullish signal. So let's get the pencil out and draw just a little bit on what this potentially means here. So off of this low, the structure is starting to look like a classic pattern. It's going to be key that we get above these levels. And if we do and would challenge this 40, then it's likely we could go all the way up to the 200, which is 20,300 on this. So the pattern would end up looking something like this. And then I think we come back into these averages. I think we get this big wide consolidation, and everybody's going to be hooping and hollering. This is the all-time highs up here. But the structure of this market is likely to stay virtually in this range as we come through. And maybe we get a little channel that starts to build, and maybe we work this channel up towards here. The key will be, and we won't know this, just looking at this, we're probably 3 weeks at least, 2 to 4 weeks, we'll just put a range where we'll start to we'll find out where the high end of this range is. There's no way to predict it right now. I could go in and do Fibonacci patterns and stuff like that. I think we're just randomly going to work into this area. So the opportunities are going to be, from an index standpoint, is trading these ranges and watching these patterns. Let me clean this up. So this downward 40 period moving average, this 10 here, and you can see where the red dots are. This is what's being projected by the algos where we're going to trade in. And that kind of makes sense with the moving averages right in that range. And whether we can, build something and get a breakout, or that's not, I can't project that at the moment. What I can project is that we're going to trade in this range, and this 40 period moving average I just talked about, that's going to be your top point to trade off or reject. And so that would be the best pattern from that standpoint. I didn't show you on the S&P, but I'll show you here. If you remember, we had this big spike up. Wednesday was supposed to be the peak momentum, and then we saw this big spike down. It actually, a lot of times these projections don't come into play as they're being projected. This one is almost exactly what was being projected. So we look at the value yesterday of the ppm. Let me just, yeah, we're looking, yesterday it was 0.81, and now we're negative 0.28. And this is that echo pattern. If we go back 2 weeks, I'll put my cursor over here. This is the echo pattern, hang on, off of this pattern right here. So we got this big spike off the low, and then we get this consolidation. This is daily, and then we come back in. Now it looks like there's a reasonably positive flow coming from here. So the upward channel looks good. It's going to be key whether we can get through two levels, yesterday's high, but more importantly, that 55 on the S&P, it's 55.28. On the NASDAQ, the number is, let me bring that up so you can get it. On the NASDAQ, that number is 19,383. So that's going to be the number to watch. So it's about 500 points on the NASDAQ from here. It's possible if I get through this run, maybe I can take do some individual stocks tonight. We normally don't do that but there was nothing to really discuss as far as the fundamentals go. Everything's pretty typical right now. The only thing that we have to pay attention to is watch out for the talking heads from the White House. They can disrupt things positive or negatively. And I think they did a pretty good save on the market, because like I said, from my viewpoint, I didn't see that anything changed from 2 days ago other than the prices, and the comments were, the moderation comments. So markets are pretty sensitive to virtually not news, but just rhetoric coming out of the White House. So let's I'm going to look at this. I haven't looked at it for a while. We're going to go to the Russell just real quick on a weekly. It's pretty amazing. My buddy Tom Lee still talks a big game on the Russell. I'm not sure what he's seeing, but we are setting up this. It's virtually the same pattern, but it's much weaker than the other patterns. And what we're seeing here on the PPMs is more weakness. Notice the red dots on the S&P and the NASDAQ were both formulating and moving with a upward shape pattern. And this one, we're seeing a downward flow, and especially PPM1 is looking at potentially weakening into really early May, into the first week of May. So I think it's going to continue to be a laggard. I noticed that the NASDAQ and the Russell are down for the year about the same. And so, but it's an interesting pattern to look at. This is, I said I was going to look at weekly. This is daily. Let me go to weekly. Yeah, this is a little more interesting pattern to look at, because now you can see the rejection off. We got a new high. It was almost like sell the new high. It's actually one of my new trades. My favorite trades is when we get into a pattern, it was sell the new high, you get a rejection. We're back into the range that we have been in going back to 22 on the small cap stocks. These are all zombie companies, and there was a lot of hype around the small caps, leading the way. And typically in a market cycle, you get the big, large caps leading the way. We had that for 2 years, and then you get a rotation, and the rotation goes. So people are looking for, traders are looking for something cheap to go into, and they were playing that game, but everything else was still going up. So there was no serious rotation. And now with things where they are now, we're looking at not as the same level of volatility, but we're still looking at a big consolidation set up the pattern. And there used to be an old saying when I started in the markets in 1979, there's stock ahead. So this resistance level that we saw going back, what year is this, 21? We came into that and we rejected. We've been in that range going back, 4 years. We get up to the top end, rejects down. So I don't see any collapse or anything going from here other than it's more of the same. There's some great stocks in this index, but as an indice, as a broad indice on small caps, it's pretty tough to trade. There's probably going to be some trades out of here once we get some further bottoming. So let's go to the treasuries. Treasury, this is weekly. Treasuries have this big giant volatility bubble. Let's bring up the indicators. They're showing there's still going to be a little bit of upward pressure here from the standpoint of interest rates. I've given you guys this number for a number of days, 4.72. If we go above that, then we're probably going to satisfy some of these upward Fibonacci targets, 491 on the weekly to 515. I don't expect that's going to happen. As I put out there last night, we're back, we're below this first number, 454. We got that spike up 2 weeks ago, blew up the volatility. We formed this bubble on the weekly. It's going to take, I'm telling you, it's 4 to 6 weeks. We can trade in a very broad volatility range. All of the indicators and the moving averages, the projections for their future is showing that we're probably going to move down. And I put out last night, somewhere 440 top end, probably 415, extreme 395. We're just locked in this range. So I don't expect there's anything going to happen there. Yeah, we're rolling along pretty good. So I'm gonna hit the old school days. We haven't looked at crude for a while, so we'll do crude and then gold. Go through the whole spectrum here. Crude is trying to bottom here. We get down to what a 55 handle. Here in Arizona, at least up in the mountains here, we've finally seen prints on the signs at gas stations under $3 for the first time. I saw barely under 299 or something, but this is. But we still have some pretty solid downward pressure coming in here. PPM1 is at a 1.2. That's big time. So you're going to have resistance on crude is going to be. Let me just get the number here. 60. We'll call it 6580 to 6610. And that'll be resistance, but it looks like we're trying to set up a mini bottom here, but all of these moving averages and all this stuff is going to be around 66 to 68 is going to be the ceiling. But it does look like we still have a bit of a downtrend going, and we're just going to stay flat here. So no big deal. This is where we're trading now below the lower levels we've been at. Since this is a weekly chart, let me spin this out a bit. Yeah, if we just go back during the 22 to current, we spiked up, but we've really been locked in this range 22 on, right? And we're trading down at the lower end of the range right now from that standpoint. So there is a downtrend form, but it looks like it's stabilizing. You can see the forecast is for it to go up. All right, let's go to gold. I made a comment in the Substack last night, and if you don't have the Substack for the newsletter, it's $8 a month. It's kendallreport.substack.com. Free day, I think a 7-day trial. But the gold, I told you, I think I said it in yesterday's broadcast, but I also know I said it in last night's newsletter. Anything that looks like a 10-day moving average value that you see, you should be able to buy and trade off of that. So this is, you can see, this is weekly. Let me go to daily. So we got that reversal the other day. We got, if you look at the low tonight, 3301 low, the 10-period moving average, 3309. So we traded just below it, and already was a 40, I'm just looking, yeah, $40 run already off of that number. With that, anything with this slope and angle of attack that you see here, where these dots are, anything along this line is going to be instant buy. So if you'd have done that, you had probably a $40 trade off of gold if you paid attention to those numbers. So from a standpoint of markets, we're still going to see momentum burning off over the next, looks like probably coming into the first of the month, into early May. And once we get to that level, then maybe there might be, depending on, let me see what the values are being projected. Yeah, there's some negative values, so there's a potential for these moving averages to roll over. But really what we're seeing on a projection here, so these dots here are what's being projected. I think I should have left that up there. Let me look at something. The projection, that's 50 future bars. That's a little far out, but my expectation is that we'll stay along that 10-period moving average. This is a daily. We'll stay out there for this is what, coming into Thursday, so Thursday, Friday, into at least Wednesday of next week. We should be able to get multiple trades off of this 10-period moving average. All right, we'll do Bitcoin. Man, I'm going fast tonight. So Bitcoin on Tuesday's action, we got an RTX sell. We managed to close slightly higher. We bumped up against the extreme levels, but we're seeing peak momentum coming into play. So we should start to go sideways. We also got a little bit of a bubble here. Let me blow this up so you can see it. It's not drastic, but we did get what I call volatility expansion, and that's going to have to normalize and contract for a few days. We should come in around the 10-period moving average, and that's also just like with gold. You're going to be able to get some trades off of that. If you're trading Bitcoin, you should be able to trade off of that slope. Right now, the 200 is in the mix as well. But we look at the PPMs, it's telling us that the momentum has peaked for the moment. Even it's still very positive, so there's very robust uptrends here. That's why you should still kind of flow. We'll see what happens with the market grid over the next couple of days, but I cover that every night in Substack. And there's also data fact sheets with the Substack, just like I showed you with S&P just a few minutes ago. So there's data sheets. Right now there's data sheets for S&P, NASDAQ, gold, and Bitcoin every night in the newsletter. So like I said, it's $8 a month, and that'll get you there, kendallreport.substack.com. All right, let's go ahead and let's do this. I'm going to look at a couple of comments here, and I'm just hang with me. So I know Michael has been yelling about Pfizer. So we'll take a look. Let's do some stocks. Give me some stocks to look at. We got about 20 minutes, so I get through everything pretty good. I'm just trying to look through some comments. Yeah, so before I do the PFE, I just see a comment here by someone saying markets had no business being up the last 2 years without AI hype. That's true. Yeah, that's a possibility. He's saying that the hype on inflation would be flat for 5 years. So this is my opinion. I was talking to somebody in London this morning, and I was telling him my opinion on really what we're seeing in the markets. I don't think it has anything to do with tariffs at all. Let me come up because what we're seeing is what this I forget who it is that was talking about here is we've just seen inflation, not inflation as you look at it, but inflated, pumping of money in here, the pumping of the employment, the immigration pump. You got all this stuff going on, and now what we're doing is we're just trying to digest that, get rid of it, burn it off. It's like they spent trillions of dollars, and if nothing else came out of Doge, they don't know where, trillions of dollars, where it even went. The Treasury doesn't even have to say where they send the money. They're sending checks out, for God's sake. I don't know, for billions of dollars, I guess. I have no idea, but there's literally, evidently, no trail on this stuff. But what we're really doing, in my opinion, is we're trying to consolidate all the abuses that we had over the last several years. And we might be talking decades of this stuff. So we're trying to reconcile all of this. I think while the markets are responding pretty well right now, unless they come up with some serious deals fairly soon in the next couple of weeks, I still am expecting that Q3, Q4 is going to be very, very weak economically. And I think ultimately there is about a 60% probability that we take out the lows that we just made and we roll over to next level. And I don't think it might be attributed to in the news to tariffs or something that's going on, but I still think there's just a lot of money just trying to get out, and some of that inflation and pump in the Nvidias of the world and all that. So let's take a look at Pfizer real quick. Yeah, so this is a daily Pfizer. We got a pretty good downtrend. This little red dots here, if you have the indicators, let me point out something here. See if I can get this to. So you see these red dots that are extending out. That an old client going back into the 90s actually had figured out this is something in the logic that I put in for these Fibonacci's when they extend out or they're freestanding, they really act as a pivot point. They're places where you want to look for. Right now, it would be a ceiling in this stock. That would be 2370 is the number. So you got some stuff there. This pretty ugly reversal today in Pfizer, but we're really trying to consolidate and determine, because this stock's been under a lot of pressure. This is a daily. So I'll take a quick look at the weekly. Yeah, so weekly, there's a lot of work to be done. You get this downward 10, you're going to be multiple weeks. And one of my favorite cliches for myself, cheap doesn't make it good. You can buy things cheap, but if it's not going to move up, you just got dead money there. So you want to buy when the market's going to move up. If you're investing longer term, maybe that works. But this is potentially a move down into Fibonacci targets. So we're here. We had targets going back over here in February, and those targets were for, looks like 2160, 1936. We printed down not quite to the 1936. We got to the 21 level. So we got that Fib target 1. It looks like everything's trying to turn around. It's going to make a steady consolidation, probably staying under the 10-week moving average. All right, you guys, give me some stocks. Let's do NVIDIA since you guys aren't giving me any. I'm just going to do my own. Now, just for the record, on WaveTech, on this platform here, we've been out of NVIDIA for a while. Okay, so we're coming down into these Fibonacci targets. It looks like this is weekly. That last week we got almost there, 86.62. The target was 83.90. So we printed down, but we still have some big time trends going in here. Maybe we end up going all the way to the, down to, I don't think it'll get down this low, but we'll say 70 to 65, maybe as low as 55 would be an extreme. But we may be just trending down toward this 200-day moving average. Jensen Huang's going to have to come up with some pretty good words and to get this thing to bounce. And I think it's going to stay under pressure here for a while. It's a pretty big trend. All right, there you go. Thank you. See, I have to challenge you guys. Yeah, we got to look at the biggest Ponzi scheme ever. MicroStrategy. They should just call it Michael strategy instead of micro. But yeah, let's take a look at this. So big time turnaround. Bitcoin's going to do well. So it's lagging a bit from there. I think I didn't really touch on it on Bitcoin on the weekly, but I think around 96, if we can consolidate up here, that I'll put this in the Substack. I'm watching for a place to break out and I mentioned it last night, where we're going to get back over 100, maybe challenge the 110 highs or something like that. So we'll go over there. But this is a pretty nice trend here. The algos are all turning up, but it's really just a stable trend. So we're probably looking at maybe 397, and that obviously is based. These are pretty much mirror images of Bitcoin from that standpoint. Okay. Let's see what else we got. Gotta look at Palantir. This is weekly. Let me look at something. Yeah, there's just not enough data to run the algos. That's disappointing. But But we definitely have, we're looking at this bounce out of here. I think most of this is there's some interesting flows that happen. So this is, we'll call it still part of the meme stock environment, right? From back in 21 and beyond. But the pattern that's set up here is basically setting up some kind of right shoulder. We've got some very negative PPMs here right now. I think we probably come back into the pattern and consolidate. We're pretty near, I think, a peak here at this time. Let me look at a daily. I'll have better stats on that. Yeah, so we're kind of breaking out above. There is some Fibonacci targets here. 104, we printed the actual number is 104.30 and we printed 103.76. Looks like the peak momentum is off of this little break today. We'll see if we come back into these moving averages. But there's big time support between 90, 98, 88 on this stock here on a daily basis. And it was interesting because if we go back previously, there were 3 Fibonacci targets going back in January, and those patterns were 72.40. Hang on, wrong numbers. 107.30, 124.07, and 134. And the highs look like we came in right here at 125. So it was a perfect hit on that Fibonacci target, and that was. And then we rejected off of that level, came down. This was during the market sell-off. See what else you folks got. What time are we getting to? We got about 8 minutes to go. Yeah, so earnings Thursday, yeah. Let's look at Alphabet. So today was the peak momentum day, and we're coming back in. Yeah, it still looks like we're going to drift down in around this level where we are now, maybe getting down to 147. There's Fibonacci targets in there that are valid at 154, 169, and yeah, it's 159 and 163. So we could trade up into this level here, but I would look for a rejection overall. This downtrend is still in place. Maybe we get a zigzag where we trade up and then come back in, set up the right shoulder. It looks like more like we would look into May from this standpoint. Yeah, that's yeah, just bring up DJT peak momentum today. This is with a lot of stuff. So this will, the reason why this, I could bring up the S&P futures since we have overnight trading. The first tick tomorrow, this PPMs are going to plummet. And you can see it's actually projecting to come back to retest these lows in here. On DJT, we're right up against the 200, and if we get back under these averages, looks like we've got some potential downward pressure for sure on there. So good call on that one. About 6 minutes to go. That's one market we did not cover, and I hate that I did it out of sequence here. Take a look at the Dower. Let's do a weekly Dower. Weekly Dower is getting pretty close to peak downside, but this 10-period moving average is pretty substantial. I still think when we look at this chart, come out and look at it, I think we're going to see maybe some consolidation here, but I think ultimately when we looked at the monthly chart the other day, 90 is very easily to be reached here. Here we go. This is monthly. Big time distribution top, I think, and everything's heading us down drifting towards 95 to 90, depending on how fast it gets there. But the Dow is definitely in trouble. All right, I'll come back up and we'll call it quits. Thanks for giving me some stocks and stuff. I think that the markets are just going to be locked in this consolidation range. It still looks like there's some upside potential from the standpoint of market trends that have come into the week. We don't really have any material range, but we've got the pumpers in the White House that are going to be screaming about screaming about the deals that they're not telling us about. There's more deals coming. We're optimistic. They're going to throw all the rhetoric out. And I mentioned in last night, I kind of hung up on this. I'm sorry for that, but I get in these threads and I keep looking at things and I'm like, it's like, show me the money. And Jerry Maguire, it's like, come on, show me the money. It's just I think kind of ridiculous what's going on here because they built such high expectations from the White House that it's going to be very difficult to perform. And if they don't, there's going to be some punishment. So there's still going to be lots of uncertainty, that word that's been thrown around a lot in the last 3 months. The uncertainty will continue. We're going to have volatility, but in general sense, looks like markets are trying to recover. Our database is buying with both hands. We've had almost 4,000 buys in the last 3 sessions. So there's definitely a switch. We usually don't get those big tranches of orders, by the way. Probably should have said this during the database review, but we don't get those big tranches of orders if there's not a reasonable turn happening in the market. So I would say consolidation is the turn we're looking at because we're still below 42 on the database, but there's definitely a big shift in attitudes in the markets, and cash flow has changed a lot from just 2 weeks ago, right? And we go back to the last Wednesday thing. So far, the rhetoric is working. It's supporting the markets, but we need some material things to hang our hats on. Anyway, folks, I think that's going to do it for tonight. I appreciate everyone that comes on. We'll see you same time tomorrow. Hopefully we'll get some more insight into what's likely to happen. Thanks for watching.